Joining us now is Craig Bolanos, the co-founder and wealth advisor at VestGen Wealth Partners in Inverness and Downers Grove. Good morning.
Good morning. Great to be with you. And how nice is it on a Wednesday to have a little bit of green?
Yeah, sure. Why not? The president has said this whole tariff thing is going to take a little bit of time. The very conservative Wall Street Journal editorial page says this is the dumbest trade war ever, and the Commerce Secretary doesn't know anything about commerce. I'm sure you've seen it. What do people like yourself think about this situation? Do they think that the tariffs will ultimately turn things around for America?
You know, I worry a little bit once in a while that it's going to be a repeat of the Smoot-Hartley Act and the tariffs in the Great Depression of the 1930s. But then I'm reminded that ultimately what matters is the data. And we had the R word, recession, floated this weekend. But I've yet to see a recession happen in America when we still have job growth, an unemployment rate of 4.1%, consumers that are spending, and corporate profits that are positive. So I think this is a correction in the markets, and we'll move forward from it.
Well, we're looking at early numbers here. It looks like the Dow's up about 167 points in early trade, just opened a few minutes ago. How much do you read into numbers, and how do you know how it's going to be trending? Should people be worried about their 401ks, Craig?
Well, I think we got a piece of good news this morning, Robin, and we got a piece of good news last night. I mean, at least there's a spending bill out of the House on its way to the Senate. If we can get it off the Senate, we'll check the box. This morning, we had the inflation data come out, and year over year, it was less than Wall Street expected. That's good, because if we get lower inflation, then we can have additional interest rate cuts, and wouldn't that be great for everyone who wants to trade up to a larger house or buy one? So I think people need to make their decisions based on data, not sentiment. And right now, the data is not terrible. Just all of us feel awful with the chaos created from the tariffs.
So you think this is temporary, but it made me wonder, is this why Warren Buffett dumped all his stocks? Because he saw this coming, because the president promised a trade war.
Warren Buffett raised a ton of cash. But if we follow what Warren Buffett did 2 weeks ago, you're right. After raising all of that cash, Larry, Warren Buffett started putting that cash back to work in foreign equities, specifically buying Japanese names. And isn't it ironic that it's the U.S. markets that are down for the year slightly, but European stocks and emerging market stocks, despite the tariffs, are up? So maybe Warren Buffett knew what he was doing when he put that money back to work recently, as you indicated.
So there's always, you know, everyone always says the stock market doesn't like uncertainty, but this is a lot of uncertainty. So how do we know if it's too much uncertainty?
It's so much uncertainty. But again, this is all about sentiment, and uncertainty is what makes the market go down in the near term. But data-driven decisions is what makes the market go up in the long term. So, Robin, you asked me a minute ago, what advice do I have for 401k investors? The advice for those who are going to get retired and want to stay retired: have a plan, stick to that plan, use opportunities like this to rebalance portfolios. And remember, we have a market correction of 10 to 12% every 14 months. We were overdue. This was just the excuse to finally get it done. And it's going to take some time, because nothing is better until we have clarity on trade, the spending bill from Congress, and we really get some pro-growth policies out of this administration, which we're yet to see.
Well, you can check out more at VestGen.com. Craig, thanks for joining us. Appreciate it.
Great to be with you.